Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you've joined us for a fireside chat with GLAS Brands, Inc., one of the fastest growing vertically integrated cannabis companies in the U.S. Their session will be moderated by Scott Fortune, Managing Director, Senior Research Analyst at Roth MKM. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Kyle Kazan, co-founder and CEO, Graham Farrar, co-founder and president, and Mark Vendetti, chief financial officer of GLAS Brands, Inc., which trades on the OTCQX under the symbol GLASF and on the NEO under the symbol GLAS. Welcome back, Kyle, Graham, Mark, and Scott.
Thanks, Phil.
Thanks, Phil. And KCSA for the opportunity to moderate a discussion with the management team of the largest publicly traded cannabis operator in California, GLAS Brands. Just quick introduction. The company has built out a vertically integrated operations in the largest cannabis market of California, generating revenue from cultivation, production, CPG brands, and retail. But what really differentiates GLAS Brands is that it owns a state-of-the-art 5 million square foot glass house facility located in the ideal climate environment of Southern California to grow low cost and quality cannabis to serve California. And eventually the U.S. once federal legalization and interstate laws allow. So greenhouse is only at 20% capacity, and the company plans to add 1 million square feet of canopy to increase the capacity by 80%. Or about 250,000 pounds of cannabis annually, which is large size. So first, I will open it up to allow management to provide a summary of the company and a vision of the greenhouse asset and greenhouse brands going forward.
So thank you, Scott. We're very proud to be here. Always enjoy having a good conversation with you. You ask very intelligent and good questions. You think you did a great job describing who we are, vertically integrated, California. We're free cash flow positive, and we pay our 280E. So we've tried to just make good decisions, keep our balance sheet as clean as possible, and we think we have a long runway to increase both revenue and profitability.
Well, sounds good. First, we'll get into the cultivation licenses and what's going to happen in California on the supply side. But can you really discuss the competitive advantage of the Camarillo facility? I've seen all three greenhouses, the two in Santa Barbara and the one in Camarillo, and it's very impressive, the scale and the size of it and how quickly you've been able to ramp up the quality of your cannabis at those facilities. But what is the key to cannabis operations with the scale and the low cost, with the ongoing low price or long-term price deflation? But I kind of get into the aspect of the focus differentiation, the ability to bring costs down, and lastly discuss, the California CEQA compliance, which it was really important differentiation that most cultivators can't obtain here. Just kind of get into the details of that glass house.
Scott, let me. So that great question. Let me ask Graham to take the lead on it, and I'll kind of follow up behind it.
Yeah, great question, Scott. So I think it's probably good to first start with our thesis, right? Our thesis is that most people around the country want cannabis from California, right? We have the benefit of a large and free focus group. It's called the illicit market, and it tells you what people want before they can have it. And what we see is that people treat cannabis from California kind of like they treat tequila from Mexico. You probably don't have a favorite non-Mexican tequila brand, or cigars from Cuba. If all you know is where it's from, you're going to pick the Cuban cigar. And for most people, cannabis comes from California. So then built on that, we took, I'll call it kind of a first principles approach, which is it all starts with a plant. And so you need to be able to grow the highest quality plant for the lowest cost. And once you can do those two things, that's when the scale really kicks in. So what we did is we believe that we've long time, 7-8 years of greenhouse in California for more than half a decade, which it means we're the largest in the United States. For context, if you took everything that, Trulieve, for example, has in all 20 states and put it together, our greenhouse in Camarillo is 2 times as big as all of that, right? And so Kyle and I went hunting for this white whale or unicorn of a greenhouse about 4 years ago. And the reason we loved it so much is because it's located in an ideal climate to grow cannabis. And it's one of the most high-tech, most efficient, and high-quality greenhouses out there. So most people start with the size. I actually start with the quality and the efficiency first. You don't need more poor quality cannabis, and you don't need more too expensively grown cannabis. You need high quality, grown for low cost, and that's when the scale really gets exciting. So we have this greenhouse, 5.5 million square feet, nicest greenhouses people know how to build, positive pressure, roof washing robots, ebb and flood floors that are all designed so that we can achieve our goal of being so far on the left-hand side of the cost curve and so high up on the quality curve that essentially whatever happens in the market, our product can clear it, right? We believe that, from Andrew Carnegie style of thinking, prices are cyclical, markets go up and down, but if you can grow the highest quality for the lowest cost, there's always room in the market for that. And, so far we're growing it and we're selling it faster than we can grow it. So far into this adventure, the market seems to be bearing out the thesis that there's always demand and never enough high quality, good value cannabis in the market.
And Scott, to follow up on that question, one of the differentiators, as Graham was talking about cost, ever since he and I met, almost a decade ago, our whole focus and our whole thesis was cost, COGS. And when you look at the MSOs, and we cheer for everybody, you never hear us bad mouthing anyone, that what they're doing is very important in the space, but it's different than what we're doing in the space. And the main differentiator between us is we could actually grow California cannabis, the appellation Graham just described, and deliver it to them profitably for cheaper than they can actually grow it themselves. And that's the differentiator between what Glass House is doing and everybody else.
Well, it's great. Obviously, that bodes well for the building it, growing it in California. But as national laws open up, obviously, to be able to sell that nationally. But we'll get into that. Let's discuss the current California market. As you mentioned, a lot of the top MSOs have found it very challenging and have left the market due to, obviously the challenges of California of regulations and high taxes. But let's dig into the legal supply for cannabis as far as cultivation licenses. There's many that are not being renewed here. We calculate canopy has come down from about 82 million to 60 million square feet. And as a result, we've seen the pricing increases and some durability to stronger prices here. But just touch base on the California market, the competitors there, and what we've seen from the supply side of things.
You want to take
Why don't we let Mark take he's been watching the data on that, and he feeds both Graham and I the most up-to-date data all the time.
Thanks, Kyle. So I'm going to say starting kind of last year, mid-year, July, we've seen the number of active cultivation licenses go from 8,000 to we're now under 6,000. So over the span of 11 months. And during that period, I'll just use our flower, grade A flower, the price is just about doubled in that time period. So we clearly have seen people leave the market when the pricing was destructive and now move up to a point where, from our perspective, if pricing stays where it is today, we're in a very strong position because, we've guided to an average selling price north of $300 in the second half of the year. And we think we can get our cost down to $120. So you do the math, and we're pushing 60 plus margins in our wholesale business. So the trends are working well for us. The pricing is good. We've seen a lot of consolidation in cultivation and expect it to continue at least for a few more months.
Yeah, I think, and to the question, the market, Scott, right? California is absolutely the most challenging market, right? Kyle and I are both, California born and raised, and believe in this market. And everything the Glass House does is California. And I think it's not a market for tourists. As you mentioned, you've seen people come and you've seen people go. You really need to live and breathe this every day to be able to succeed here. But the upsides to succeeding are massive, right? It is the single largest cannabis market in the entire world. With all the problems that you hear about, with all the regulations, with all the taxes, we're still selling $5 billion a year of legal cannabis, right? There's probably another $10 billion or more of illegal cannabis happening as well. So it's larger probably than the second and third markets combined, right? Like we do more taxes in California than most states do in sales. And so the benefit is if you really want to win the long game, right? If you really want to win the World Cup, you want to be practicing with other World Cup teams, not elementary school teams. California is the World Cup, the most educated consumer, the longest running legal market, discerning innovation, the culture, the genetics, and 1,600 other brands that are trying to knock you off the shelf, right? It's a very different world. When we say our Plus Gummies edible is in the top 5, that really means something in California, right? Top 5 in Illinois, you could be in last place because it's a very different market. So the benefit is, California is like training at altitude. You don't do it because it's fun. You do it because when you meet someone who hasn't, you win. And so that's the world that we're living in, is being able to win in California, we believe means you can win everywhere else. And the inverse of that is not true. So it is hard, but we have found a way to be cash flow positive in this environment. And we believe that positions us very well for everything that happens next in the future of cannabis.
And Scott,
go ahead.
Just real quick, last point. If you go into a dispensary in California versus a dispensary in New Jersey or Massachusetts, I mean, most of those large companies will do more like a Trader Joe's model. You can't do that in California. You try and play that game, the customers are gonna go to the places where they have a selection, and so it can't just be our brands. We want to cater to the consumer, and so California's a whole different ball game. And also, this is the only state we want to be in. This is the only state we're in. We have nowhere else to go, so we have to win here. We don't just shut down operations, say, well, we're off to New Hampshire. It doesn't work that way for us.
Yeah. No, I was just saying we saw recent data from BDSA that says the California market will be down sales kind of on a yearly basis. But what we're seeing is a lot of competitors moving out of the market, right, from the cultivation side and brand side. So it bodes well for those with scale to gain market share. That's the growth opportunity, market share from that standpoint. But real quick, one of the things that's really on a lot of people's mind is. Go ahead.
I'd like to add in one thing very quickly, though. One of the reasons when I look at headset data, it looks like sales have declined. A lot of it is just due to the pricing pressures. So consumers are benefiting from lower unit prices. So there's a difference between sales going down, which is different than consumption, which has remained, I'm going to say, relatively flat post-COVID. So we had COVID, there was a step up, and it looks like the consumption has remained flat. So the consumers are still using the product at a very high level, and the market is not contracting.
California is still a hot state, Scott.
The demand's
People
there.
like weed.
Yeah. Let's get into kind of the seasonal aspect of growing and the side. Everyone knows, California's had a pretty radical winter. It's great for the water we need here, but we have not seen sun for the most part of spring too. And how does that lack of sunshine impact the growers overall in California? And kind of, as you look at, it's probably more of a Graham question, as you look at the production yields and output for Glass House, with the potential going forward, just talk about that, the production, and then the sustainable pricing trends that you're seeing here at these levels.
Yeah, sure. So sunlight definitely matters when you're a farmer, right? Mother Nature is our dance partner. So one of the things that we do is we want to get everything that she gives us, which is both free cost-wise as well as environmental impact-wise. Then we want to take our facilities and team and polish and supplement that to be as perfect for the plants as possible. So, an adage that I sometimes like to use is 1% more light is 1% more production or yield or lower cost per pound, however you want to frame it. That goes both ways, of course, right? So 1% less light also translates to lower yield. I think the way to think of it, though, is do relative to everybody else, right? And so everybody else is living in the same sunshine climate basically in California right now. And so with the advantage we have is with our team, the fact that we're growing in an area that we've been growing in, the general locale for coming up on 8 years, and then our facility down in Camarillo, which has the highest, light penetration that any greenhouse can have because it's positive pressure, because we have roof washing robots to keep the glass clean. So the real answer is more sun equals more yield. The relative answer is we can handle the interesting weather that we've got so far this year as well or better than anybody else out there in the market. So I think we're going to see in the weather, in NorCal, where a lot of the cultivation happens. Up until 3 weeks ago, they had snow on the ground, right? That's something that we escaped in Southern California, but still seeing the clouds and picked up a lot of rain, which we needed. And we're looking forward to the sun, but I think relatively you're going to see probably less output on the market, and we'll be able to over index in what we achieve relative to the rest of the players out there that we're competing with.
And Scott, this is no different than any other ag product. I mean, when there's weather in Georgia in a year that's extra wet, the pecans and the peaches, the pricing oftentimes goes up because the yields are down. So this is just sort of what happens in agriculture, and cannabis is no different.
You sign up for this when you're a farmer.
Yeah, and let's talk about you've grown out the nursery large size there to fulfill the whole greenhouse as you need it. You're only 20% capacity, but you've announced a capacity expansion here. You're really leveraging your phase 1 building with everything in place just to add on phase 2. You've said it can cost anywhere from $10 to $13 million to generate basically 25 to 30 million in EBITDA. But any updates on the timing and then potential to move into? I know you have other greenhouses that have lighting in there to supplement. Just kind of your timing as you look out for expansion going forward here.
So we're going to be announcing something, on how to fund it pretty soon here, like very soon. And once we have that, then we'll be able to do the follow-on announcement on kind of dates on turning on. Some of that is just supply chain related, things like that.
Yeah, it is really exciting position to be in, Scott. I mean, the basically, a lot of people told us we were crazy when we went into this, right? It's too big. We've seen it in Canada. Canada flopped. There's too much supply, right? And we persevered with our belief that growing in Southern California with an experienced team is not the same as in Canada, right? And I think that nothing bears that out better than the recent articles that show 80% of what's been grown in Canada is getting thrown away, whereas you look at us and we're selling it faster than we can grow it, and typically are running, a week's or less worth of inventory with our current footprint, right? So much so that we're so excited about what we're doing that we want to add another 1 million square feet to it, right? Like that's showing that the market is telling us that what we were doing was not crazy, and it's not the same as Canada, and the California market can absorb this because, again, left-hand side of the cost curve, high up on the quality curve. If you can grow it better for less than anybody else, there's never enough of that.
Real quick on the financials on the biomass wholesale side, the kind of that outlook that Mark you've guided for, just kind of, and we'll get into the CPG and the retail side, but just kind of the outlook here on the wholesale business side for you.
So we, as we look into the second half of the year again, if pricing holds where it is today or in this vicinity, we should be generating on average a selling price around $330 a pound. And then again, we're forecasting our cost at $120 per pound in the second half of the year. So the margins should be very, very strong. Second half of the year is seasonally our best. But even, you look at Q1, we still have 42 margins in our wholesale business. So, I expect them to be well above 50% in the second half of the year. And as Graham said, demand remains strong. We're selling it as fast as we can give it to the wholesale team to sell it. So expect a very strong second half of the year.
Yeah, and also, before we leave the kind of the supply demand topic, right? We talked about licenses and the attrition that we've already seen. There is another hurdle coming, which is a provision ends at the end of this month, so call it 3 weeks. You can't get an annual license, which is what you need to continue operating past July 1st, unless you've cleared something called CEQA, which is the California Environmental Quality Act, for those who have not had to tangle with it. And it's an amazingly high bar. It's very easily weaponized. And if you look at the licenses that we have in the system, so we had, call it 8,000, we're down to round number 6,000. Of that 6,000, 45% of those licenses are still provisionals. They need to get converted to annuals in the next 3 weeks, or they will be gone, right? And that's a significant amount of the supply. And given the challenges out there, there's a minority of those licenses we believe are going to be able to make that threshold, which is going to take millions more square feet out of the market in the next, call it 30 days.
Real quick, let's turn to the CPG branded side of things. Obviously, it's been a struggle. We're seeing a lot of brands struggling and to take market share. But the lack of California retail access, the long-term perspective of your own CPG brands, like we said, we need about 4,000 to 5,000 stores in California to really drive that. And eventually nationally, as you can sell your CPG brands, like you said, the California brand nationally. But just kind of an update on, where the market is on the CPG side and what's your focus on different categories and your brands fulfilling that side of the business.
Scott, the difficulty with CPG is it's dependent on the retailer's ability to pay. And I don't have the exact figures, but from what I've read in the media, it's like 25% of stores didn't pay their state taxes. If you're not going to pay your state taxes, it means you're in pretty good distress. And so you can imagine the market is distressed. And even some of the other companies that are out there that, when you read their financials, they're struggling along. So I would tell you that CPG is also in distress here in California as well because of the pain of the retail. And as you said, we need more retail, but where we have retail, a lot of times we have an overabundance of it, meaning like Santa Ana, you have 20 stores. And maybe that could survive when you had no other city in Orange County. But as Costa Mesa opens up and then Huntington Beach opens up and other cities open up, then those cities that have an overabundance, they become more and more distressed. Not to mention a lot of the companies were built on, difficulty with expensive debt, really expensive leases, things like that. So unfortunately, I would predict that this is going to get worse before it gets better for CPG and for retail.
Yeah, I think, long term, we believe in brands. That's, grapes are grapes until you put it in a bottle Opus One with a Napa California label on it and ship it to the rest of the country. So we do think that's where it's going to get there. The question is, in the short term, with the turbulence coming, we have those 5,000 retail stores. It's just only 1,000 of them are licensed. And so only 1,000 of them can we sell our products as a licensed producer to, right? So there's many ways that you can look at it. From looking at, the dispensaries per capita, California has the lowest in the country, which is crazy. Again, licensed. If you look at the unlicensed, we're probably not so far off. You can look at a state like Montana, which has 1 million people and did $300 million worth of sales, right? So let's assume that people in Montana smoke the same amount of weed as people in California. I think it's probably a conservative assumption. That would mean California's legal market should be somewhere in the $13 to $14 billion range instead of the $5 billion that we actually see, right? So that's the true market that needs to push through. You're going to see retailers that struggle, but at the end, as Mark pointed out, it's not consumption demand destruction, right? It is a matter of connecting the dots all the way to the consumer. And I think, over time, just as sure as there's no half price gas station with no tax that you can go shop at, there will not continue to be, bootleg dispensaries that don't pay taxes and continue to operate. So, it's a matter of one of the beautiful things about us, right, is we are vertically integrated. We have our cultivation, we have our brands, we have our retail. So we have a lot of levers that not many people do that we can pull to navigate those twists and turns as we, persevere through the short term to make it to the long term where we think we're, particularly well suited to achieve because of our ability to grow and create products better, less expensively, and in an appellation that consumers show a preference and willingness to pay more for.
And the beauty is you have those 10 retail stores, you're able to gather the data from those stores and really drive, okay, how do we build out our CPG categories and brands with that information from that standpoint? And then you're pretty well located on the coastal side with less in these deserts, right? And I think that's a good retail focus right now for California, where it's less competition.
Yeah, I mean, that's the problem with the deserts. Nobody's located there, right? You take a city like Fresno, which has 500,000 people, right? That could be one or two states on the East Coast. 2 years ago, they approved 20 dispensaries. Right now, they have 2, right? I mean, that's one dispensary for every 250,000 people. Like, for reference, there's 11,000 liquor stores in California, right? There's 77,000 places you can buy a cocktail. There's 1,000 places you can buy a joint. It's clearly not the right number, but we got to get these weed deserts open. And there's a bunch of things the state's trying to help right now. A lot of the ordinances are still in the pipeline. And, last November, LA County, you'd think the epicenter of cannabis. Well, until last November, they had no dispensaries. And then they approved it. And now they're going to be 25, but it's going to take time, applications, building permits, construction, opening. But you can see the things in the pipeline. So there's no chance that we're not going to eventually get there. It's just the timing. And again, we're very well positioned to navigate that through our own stores and our cultivation until the world lays out the way that it eventually will look.
Yeah, we're running out of time. There's a good question. It kind of leads to my next question, kind of the big picture of legislation SAFE. And the question comes on from Q&A. What's the game plan if SAFE passes, regular bank loans at 8% to finance expansion? That's kind of what everyone's saying for. We've said, I think they're going down the right path now. The progress SAFE forward as a standalone bill, I think it'll take towards the end of this year, but at least we're going down that path. Your guys' outlook on legislation, SAFE, interstate commerce, and anything new from the update from that standpoint?
I was just in DC a couple of weeks ago, and happily I was talking to Republicans, which welcome to the party. Nancy Mace has been a great leader. Enjoyed meeting with her. Mike Lee, who's a conservative guy. Really, I feel good about it, but I don't want to be Lucy continually lifting the football up as the Charlie Brown SAFE goes to kick and miss again. The hope is that the Republicans stay reasonable, and more importantly, the Democrats don't try and add things that they know will just sink the ship. So, but when it comes down to safe banking, a lot of it's going to be the devil being in the details. So it really won't have an effect for us. We've been banking for a long time, but we are cheering for it because it'll help all the small players out there that are having difficulty. And then as far as interest rates go, sure, the more players that come in to loan money, the better. But yeah, more than anything else, it's just incremental movement that would be great to see, because we figure that's just another brick out of the wall of prohibition.
Yeah. So Scott, the important thing is that SAFE just represents upside for us. None of our current plans are reliant on any type of legislation coming out of Washington, D.C. So that is upside. But if it doesn't happen, we've got our game plan. We're going to succeed in California. And then depending on what happens and when it happens, we'll adjust the plans to take as much advantage as quickly as possible of that. But we don't need it today to do what we're going to go do.
No, that's the beauty. You guys have been focused on executing. You've hit you have very clear guidance, and you've been able to hit your guidance and, in fact, move forward your cash flow generation. And so you've done everything you can in your power without any federal legislation help. And then just want to end on one note, you've been really advocates for social equity, right? You brought a new brand ambassador, Luke Scarmazzo, and that's been great as part of this overall cannabis industry to help out what's been wrong there. So any final thoughts? We have about 30 seconds left. Final thoughts to leave with investors here.
I would say, please call your congressmen, call your senators, and ask them to push President Biden to release 2,700 federal prisoners who right now, while we're having this conversation about what we're doing in a legal business, they're sitting in prison, and that's not equitable in this country.
Amen.
Right. I would say last thing, you have an investor session coming up in a couple of weeks, and anybody who hasn't seen the facility, I think is a great opportunity to see what's been built here. I've seen a lot of the greenhouses in Canada and in the US, but there's nothing as impressive as this in the largest cannabis market of California. So we'll leave it at that.
June
Thanks,
23rd,
Kyle.
and you can actually, if you buy if June 23rd, please come on out here. If you buy a share, it's like $4 today. One share, pass on your coffee. Graham will let you touch his hat.
Yeah, and it is, I think, one of the best annual meetings out there. It is at our farm. The big, the Unicorn Farm is where we actually hold the meeting. It includes tours, so you can see it all. And you can see the, where it's built, how it's built, and why we love it in person, as well as getting a chance to see Kyle's blue sweatshirt in person. So we'd love to see everybody out there.
Be like Grandpa Joe. Get up from your thing, start